Well, the stage is being set for a surge in mergers and acquisitions. While credit continues to be tight, many firms have stored up cash and cut costs over the last year. In fact, more companies piled up cash faster compared with interest costs than ever before over the last 12 months. That is why Sullivan and Cromwell M&A partner Frank Aquila says we are going to see an explosion of deals over the next 12 to 18 months. Frank is being profiled as a legal rebel by legalrebels.com, and he was the lead attorney that put together InBev's acquisition of Anheuser-Busch, and we're pleased to have him join us on set. Frank, great to see you.
Good to see you again.
First, set the stage. Why are we seeing an increase right now of M&A already?
Well, there's a lot of different factors. First of all, the recession is either over or bottoming out, and whenever you have a change in the market, you tend to see M&A activity. Secondly, a lot of companies they cut early in the recession, and therefore they have a lot of cash in which to spend. And the main thing is, for the last 2 years, it's been difficult to do deals. And so there's really a backlog. A lot of transactions that people were thinking about, either specific transactions or types of transactions, they really couldn't do for the last 2 years. Now's the opportunity to do it. So all of those are really feeding what I think is going to be a significant uptick in M&A activity.
Are you suggesting that companies jump the gun in looking at the recession and the economic forecasts and really focus on cost cutting versus profit growth?
Well, I think unlike a normal recession, the concern, if we remember a year ago, was you couldn't even, GE couldn't get commercial paper sold. So companies,
which is the day-to-day credit. That should be the easiest stuff to acquire.
Should be the easiest stuff. And so what happened was that a lot of companies were concerned about, what if this credit crunch lasts for 2 or 3 years? So we therefore need to make deep cuts now, conserve our cash, build cash when we can. Now, a year later, a lot of those companies, not all of them, have come out of the recession with a fair bit of cash that they can use to deploy in acquisitions.
And if any of these acquisitions want to be financed, the credit is still relatively tight. No, we just did a report that banks continue to hoard cash.
Well, credit continues to be tight. However, banks make money when they lend money. Who are you going to lend money to? A company that is highly leveraged, or a company that is fairly cash rich and has a good strategic plan, and the acquisition is part of that strategic plan. So good acquisitions will always find financing, or at least in this market are finding
So what does
financing.
that say for the private equity industry, for example?
Private equity is going to be a lot tougher, but you know what? Those guys are very, very smart. They have a lot of capital to deploy, and I am convinced, and I'm seeing early signs that they're going to be back in the game. Maybe not the big 9, 10 times leverage deals, 50 billion going private, but they're going to be back in the game.
What sectors will we see the most deal flow consolidation action?
I think we're going to see it in a lot of sectors, pretty much across the board, but certainly I'd continue to look at financial services, energy, the tech sector, as we've seen, but even things like entertainment. I mean, we saw the Disney Marvel entertainment deal. I think we're going to see it in a lot of sectors. I think we're going to see cross-border deals. So it could get quite interesting over the next few months.
Can I ask you about NBC Universal? Any heads up there? I know there's a lot of speculation.
I mean, clearly there's a lot of speculation. I'm not involved in that. I don't really know what's going on. But, that's a pretty big ticket, and it's a pretty unique asset. So I suspect, a lot of folks will be looking at that and looking at alternatives.
And while I'm feeling so bold, what do you think about Cadbury Kraft? Do you think that will happen? The Cadbury CEO saying that he sees more of a strategic alliance caving just a little bit today.
Yeah, look, any deal that's unsolicited, and I know from the experience that I've had over the years, when it's an unsolicited deal, it is totally uncertain as to where it's going to go, and I think everybody's looking at that space, but I think we'll all have to hold our breath a little bit longer, unfortunately.
And as we wrap things up, how are our overseas rivals, if you want to what is the overseas climate looking like? I mean, are they looking at doing deals here in the U.S.?
Yeah, I think it varies from place to place, but I would certainly see Brazil and Japan and Asia generally.
In the form of like a sovereign wealth fund or something different?
Sovereign wealth fund, together with industrial companies there making acquisitions in the U.S. and in Europe. there's a lot of interest in that, and they've shown that they're capable of doing very large and sophisticated transactions here.
All right, interesting stuff. Frank Aquila, partner Sullivan and Cromwell, many thanks for joining us today.
Great seeing you.